Welcome to Talk Tickers, your deep dive into the numbers that move markets. Today, we're unpacking AMD's recent Q2 2025 earnings call.
Yeah, lots to get into here. Financial, strategy, market reaction.
Exactly. We'll dissect the performance, what management said, and crucially, why the market seemed a bit hesitant initially.
Right, because you had some really strong numbers, but the immediate stock reaction wasn't exactly, popping champagne corks.
That's the puzzle. Strong revenue, but caution. So we're going to figure out, or at least explore, why that disconnect might be happening.
It's that classic earnings call paradox, isn't it? Good news, but maybe some shadows lurking.
Well, let's start with a quick snapshot then. The headline numbers for Q2.
Okay.
Revenue first.
Okay.
AMD reported $7.685 billion. That actually beat the consensus estimates.
And by a decent amount, it's up 32% year over year. That's pretty robust growth.
Definitely. Now, profitability. GAAP earnings per share, so the standard accounting measure, came in at 0.54 cents.
Also a beat. Analysts were looking for around 50 cents, so that's positive.
But, and here's the first wrinkle maybe, non-GAAP EPS, which adjusts for certain items.
Yeah, the one people often focus on for operational performance.
That was $0.48. And the consensus was actually $0.49. So a slight miss there.
A penny miss. Small, but, markets notice these things.
They do. And then there's free cash flow. This is the cash left after running the business and investing.
And this was a big number, a record actually, $1.2 billion for the quarter.
Huge. Suggests the underlying business is generating a lot of cash.
Absolutely. Very healthy sign.
So you have this mix. Revenue beat, GAAP EPS beat, record free cash flow. But that slight non-GAAP miss. And despite the positives, the market reaction was, well, cautious.
Yeah, you saw trading volumes spike way up, volatility jumped. It wasn't the straightforward positive reaction you might expect from those headline wins.
Which tells us we need to dig deeper than just the summary numbers.
Exactly. Something under the surface is making investors pause.
Okay, let's get into those pivotal financials then. Break it down by segment. What jumped out at you first?
Well, data center is always the big focus, right? Especially with AI.
Right.
Revenue there hit $3.2 billion. That's up 14% year over year.
Okay, 14%. Solid growth, definitely positive. But maybe not the, hyper-growth number some people associate with AI right now.
It's steady, good, but maybe expectations were even higher. But then you look at the client segment.
Yeah.
That was up a massive 67% year over year, $2.5 billion.
Wow, 67%. What drove that?
Management pointed to record desktop CPU sales. Seems like the PC market rebound is real, and AMD is capitalizing big time.
Okay, so strength in the core PC business. That's important.
Very. And gaming wasn't bad either. $1.1 billion, up 73% year over year.
73, also huge.
Yeah, strong demand for their new GPUs, and console inventory levels normalized, which helped.
Right, that was an issue before. What about embedded?
That was a one slightly weaker spot, down 4% year over year, $824 million. So most segments growing, some very strongly.
Okay, so strong segment performance overall, especially client and gaming. But let's connect this back to the profitability and that market caution. Gross margin seems key here.
Absolutely, T. Non-GAAP gross margin was reported at 43%.
43%. That sounds low, especially compared to their usual targets.
It is. And there's a very specific reason, an $800 million inventory write-down.
Oof. $800 million. What was that related to?
U.S. export controls, specifically impacting their MI308 GPUs intended for China.
Ah, the geopolitical factor hitting the bottom line directly.
Exactly. This isn't just some accounting adjustment. It's real-world policy impact. Without that charge, they said the gross margin would have been around 54%.
54. Okay, that's a world of difference. That explains a lot of the caution, I bet.
I think so. It highlights the risk and the immediate financial hit from these regulations.
And it flows through to operating income too, right? Even with higher spending.
Yeah, OPEX is up 32% year over year, about $2.4 billion. They're investing heavily in sales and AI R&D.
Makes sense.
But operating income landed at $897 million, which was actually down from last year, primarily because of that massive inventory charge.
Okay, so the charge really impacted the reported profitability.
Significantly. But then, paradoxically, you circle back to that record free cash flow. $1.2 billion.
Right. How does that square? Lower operating income, but record cash.
Well, cash flow calculations are different, accounting for things like working capital changes, stock-based compensation. It shows that despite the write-down's impact on reported profit, the underlying cash generation engine is still running very strong.
And they're using that cash.
They are. returned $478 million to shareholders via buybacks in Q2. That's $1.2 billion in the first half. And they got approval for another $6 billion repurchase program.
Okay, so management is signaling confidence with those buybacks despite the margin hit.
Definitely. They're putting their money where their mouth is, signaling belief in the long-term value.
Which fits with the CEO's commentary on the call, right? Sounded pretty bullish.
Very much so. They emphasize robust demand across the board, especially computing and AI. They're positioning for significant growth in the second half of this year.
Driven by
The ramp-up of their new MI350 AI accelerators and continued share gains in ePYC server chips and Ryzen client CPUs. They expect a strong finish to 2025.
And they backed that up with guidance for Q3.
They did, guiding for revenue between $8.4 billion and $9.0 billion. The midpoint, $8.7 billion, implies around 28% year-over-year growth.
That's a big jump sequentially, too, like 13%.
It is, and importantly, that guidance doesn't assume any revenue from those MI308 chips going to China.
So that $8.7 billion midpoint is without the potentially restricted sales.
Correct. If they get licenses, that would presumably be upside. And they guided Q3 non-GAAP gross margin back up to around 54%.
Okay, so they see Q2's margin dip as a one-off due to the write-down.
That's the clear message, a rebound to the mid-50s.
What are the main drivers for that strong Q3 outlook, then?
Strong double-digit growth expected in data center, really fueled by that MI350 ramp kicking in.
The new AI chip.
Exactly. Then modest growth in client and gaming client up, gaming kind of flat, and embedded returning to growth. So growth across multiple segments, but data center leading the charge.
Let's talk more about those China export controls. The $800 million write-down was for the MI308. What's the latest on potentially shipping those?
Management sounded, I'd say, cautiously optimistic. They mentioned progress with the administration and expect a license decision in the coming quarters.
Coming quarters, so maybe later this year or early next?
Seems like the time frame. They also noted most of that written down inventory is work in process. So even if they get licenses tomorrow, it takes a couple of quarters to actually turn it into shippable product and revenue.
Got it. So it's not an instant recovery, even with approval.
Right. And related to streamlining things, they announced a pretty significant divestiture.
Yeah, the ZT Systems manufacturing business.
Selling it to Sanmina for $3 billion. The idea is to simplify their data center supply chain, get some cash, and reinvest that capital into accelerator R&D, basically more AI focus.
Does that help margins too?
They expect it to add about 50 basis points, 0.5%, to long-run gross margin. Deal should close near year-end. Smart move. Focus on the core, high-value stuff.
Definitely seems focused on AI. What's the update on the actual AI products, the MI350 series?
Big news there. Volume production started in June, apparently ahead of schedule. They expect a steep ramp in production in the second half.
And performance. That's always the key question versus the competition.
They highlighted the MI355 specifically, claiming it matches or beats the competition in key training and inference tasks. And crucially, they claim up to 40% better tokens per dollar for inference at scale.
Tokens per dollar, so TCO, total cost of ownership, argument.
Exactly. Performance and value, that's a strong pitch.
But hardware is only half the battle in AI, right?
Yeah.
Software is critical. RSCM.
Yeah, they reported significant progress on RSCM7, their software stack, claiming more than 3x performance gains over the last gen for inference and training.
3x. That's a big jump.
It is. Plus, expanded developer support, even a new developer cloud. They know they need to make the software easy and powerful to win developers.
Any big customer wins or partnerships they highlighted?
Quite a few. Expanded deals with Meta, OpenAI, Oracle. That Oracle one is huge. A 27,000 plus node cluster using MI355X and their ePYC Turin CPUs.
Wow.
Also wins with KDDI and Red Hat. And they talked a lot about sovereign AI.
Sovereign AI, what's that about?
Basically, countries or large entities wanting to build their own dedicated AI infrastructure locally. Think data control, security, national interests. AMD is actively chasing these deals globally. They announced a multi-billion-dollar collaboration with Humane in Saudi Arabia as a key example. It diversifies their customer base beyond just the usual U.S. hyperscalers.
Interesting angle, and they're already looking beyond the MI350.
Oh, yeah. Rapid development on the next-gen MI400 series is underway. That includes something called the Helios rack scale platform.
Rack scale.
Yeah, pre-integrated systems. They're targeting up to a 10x generational performance increase with MI400, planned for a 2026 launch.
10x. Ambitious.
Very. Management basically laid out a path to scale their AI business into the Tens of billions of dollars in annual revenue. That's the long-term vision.
Huge ambitions in AI.
Yeah.
But we shouldn't forget the core CPU business, right? EPYC and Ryzen.
Definitely not. They actually hit record sales for both EPYC server CPUs and Ryzen client CPUs this quarter. Demand is strong across the board.
So cloud providers, enterprises, consumers.
Yep. Over 100 new AMD-powered cloud instances launched. Enterprise adoption growing, client side boosted by the new Ryzen 9000 desktops, and more commercial PC wins.
In gaming too, you mentioned the revenue jump. Any specifics there?
Strong demand for their Radeon 9000 GPUs, plus continued strength in semi-custom chips for consoles. They even announced a new multi-year deal with Microsoft for the next-gen Xbox.
Locking that in?
And something called Project Amethyst with Sony. So the console business looks secure and growing.
Okay, so putting it all together, AI momentum, core business strength, but this margin overhang from the China rules. How does this frame the investor context?
Well, you have that divergence we started with. Management is super bullish, right? Pointing to demand, the MI350 ramp, strong Q3 guidance.
But the market reaction boasts more cautious.
Exactly. Analysts noted the guidance is good, it resets the bar higher, and the MI350 ramp de-risks the second half numbers. But
Always a but.
the refrain is that margins still hinge on license clarity for China. Investors seem to be weighing the positive story against that regulatory uncertainty and the financial hit it already caused.
A classic tug of war between potential and present risks.
Precisely. So for you, the listener, thinking about what comes next, there are key catalysts to watch.
Like what?
That China license decision for MI308, potentially in H2, seeing how strongly the MI350 shipments actually ramp in Q4, the closing of that Sanmina divestiture by year-end.
And they have an investor day coming up.
November. Expect updates there on the MI400 and the next-gen EPYC server chip, codenamed Venice. Each of these could really move the needle on sentiment.
And zooming out to the industry level.
They're riding the wave of the huge AI spending boom. That's a massive tailwind. But HBM memory supply is tight, and competition is fierce, obviously.
Right.
On the other hand, that PC market rebound helps their client business significantly. The whole narrative is shifting for AMD. It's less about catching up, more about being a true challenger.
Aiming for real margin improvement and big market share gains, like in servers.
Yeah, they're targeting server CPU share to go from 36% now into the high 40s by 2026. That's a bold goal. It's about becoming a leader, not just a competitor.
Okay. Let's shift gears to our favorite segment, not financial advice.
Disclaimer time. Purely for entertainment, folks. Don't try this at home unless you've done your own deep research.
We're just brainstorming some, shall we say, interesting but maybe plausible trade ideas based on everything we've just discussed.
Okay, so you've got this situation. Operationally strong, great AI roadmap, record cash flow. But the market is hung up on the regulatory issue and that Q2 margin dip.
Right. Creates an interesting tension.
So here's the thought. A multi-legged option strategy combined with stock.
Lay it out for us.
Okay. Idea. Go long the common stock. You believe in the long-term story.
Simple enough start.
But then also short some out-of-the-money put options that expire in Q4.
Shorting puts. So you collect premium, betting the stock won't fall below a certain price by then. Kind of setting a floor.
Exactly. It's a way to express a view that the current regulatory fears might be overblown or resolved, hedging downside risks slightly while generating income.
Okay. Long stock, short puts. What else?
Simultaneously, you buy call options with the strike price above where the stock is trading now.
Buying calls, so betting on significant upside.
Right. This part leverages the potential catalysts. The strong MI350 ramp kicking in, maybe positive news on the MI308 China licenses. If those hit, the stock could move up significantly.
So the rationale is, own the stock for the core thesis. Use short puts to bet against excessive downside fear. Use long calls to capture potential explosive upside from catalysts in the second half.
You got it. It's trying to play both the perceived floor created by strong fundamentals and buybacks and the potential ceiling lift from AI execution and regulatory resolution. Management is clearly signaling huge growth drivers for H2.
And that tens of billions AI revenue target, the MI400 roadmap, the market might be underappreciating that long-term potential right now because it's focused on the immediate China issue.
That's the bet. If the licenses get approved or MI350 ramps even faster than expected, the upside could be big. The option structure gives you defined risk on that part of the trade. It's a complex bet on their whole multi-year AI platform strategy paying off.
Definitely not for the faint of heart. High conviction, as you said earlier.
And again, purely a thought exercise, not advice.
Okay, let's wrap this up. We've gone through a really complex quarter for AMD.
Yeah, strong top line, record cash flow, great strategic moves, ambitious AI plans.
But also that big inventory charge and the regulatory cloud causing some market hesitation. Management painted a very positive picture for the second half, though.
Absolutely. Driven by those next-gen products, especially MI350.
So the path forward really depends on executing that AI ramp and getting clarity on the China export situation.
It does. But the bigger story seems to be AMD solidifying its position, moving from just being a strong competitor to a real challenger, especially in AI compute.
As always, remember this deep dive is informational only. It is absolutely not financial advice. Markets change fast. Always do your own homework.
Oh, today we saw a company hitting operational highs but facing external headwinds that tempered the immediate market joy.
The big question for you, our listener, thinking beyond just Q3 numbers. Is this pivot towards sovereign AI deals and the aggressive MI400 roadmap enough to truly elevate AMD? Will they become not just a challenger, but maybe an industry titan alongside the current leaders?
How do you see that playing out over the next few years? We'd genuinely love to hear your take.
Join us next time on Talk Tickers for another essential earnings summary.